Hey guys, Kevin Bupp here. I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment expert Andrew Reichert. Now, Andrew is the CEO and founder of Birgo Capital, a Pittsburgh based, fully integrated private equity real estate firm comprised of two unique platforms, both Birgo Realty and Birgo Capital. Again, both of which are on a mission to improve lives through real estate. Now, the team at Birgo handles everything in house, from property acquisitions and asset management all the way down to on site maintenance, which provides both investors and tenants with unparalleled service. So with that, guys, I'd like to welcome Andrew Reichert to the show. Andrew, my friend, how you doing today?
I'm doing fantastic. Thanks so much for having me on the show,
Yep.
Kevin.
Everybody excited to have you here. I know we chatted a little bit beforehand. You're up in the Pittsburgh area, and we didn't go deep enough in that conversation. But I guess born and raised, might I assume?
No, actually, I grew up on the other side of the state.
Okay.
Yeah, I grew up in the Philadelphia area and moved out here for college and been out here ever since, about 20
Okay.
years.
Okay. Very cool. Very cool. As I mentioned, I was born and raised in Harrisburg, so a couple hours away from Philadelphia. But it's interesting growing up in Harrisburg. Um, Pittsburgh really is. It's the same state, but it's another state, right? You got to pass through tunnels, and topography is completely different, and you're basically in the Midwest, right? Once
Yeah.
you make it over to Pittsburgh, so it's interesting split down the middle of that state that basically exists. And if you're not from there, you wouldn't realize that's the case. So with that, but excited to have you here, my friend. Excited to learn a little bit more about you and your business. And so I'll give you such a brief introduction there. I know there's a lot more to your story, Andrew. And so if you would, in your own words, maybe tell us a little more about yourself, kind of your background, and then ultimately how you found your way into real estate.
Yeah, sure. Well, you're 100% right in terms of the geography in Pennsylvania. So, grew up in Philadelphia area. Philadelphia is very much an East Coast city, faster paced, kind of much more of a coastal city feel. And I ended up getting accepted into a college here in Pittsburgh and moved out to Pittsburgh. And that was actually on the heels of having gotten expelled from high school. So had a bit of a rough run through my childhood years, a bit of a rebellious nature, and unfortunately got my starts in entrepreneurship doing things I probably shouldn't have been doing. And so after getting accepted to college, Pitt really was an amazing experience. Pittsburgh is much more of a
Mhm.
Midwest city, slower pace, but also just, really amazing people. And I fell in love with the people in the city and ended up staying out here and we're raising our three daughters here today. So, to answer your question in terms of how I got into real estate, in college when I was there, I ended up reading a book called Rich Dad Poor Dad. I'm sure many
Mhm.
people have heard of and read that book at this point, but it really changed my mindset. And that was the big shift that I needed at that time, was a mindset shift. And so it was the year I graduated from college. I ended up buying a duplex and then, used that property and refinanced it to buy some more and refinanced it, buy some more. And in 2012, I resigned from a great job that I had at the time with a regional bank to start the company that we have here.
Good deal. And Burgo, give me some idea of where that name came from, where it originated.
Yeah. So in 2015, it was 3 years after I'd started my operating company. So I started an operating company called Go Realty.
Mhm.
And it was in 2015 that I linked up with my business partner who was doing finance for a local venture capital company called Birchmere. And he had actually created a spinoff called Birchmere Advisors. So we took what he had been doing at Birchmere Advisors and what I had been doing at Go Realty, and we brought them together to bring the asset management and the property management side together. So the Burr from Birchmere, the Go from Go Realty is where we got the Burgo.
Gotcha. Makes sense. Alrighty. Well, let's talk about that pivotal time. Leaving the job. Were you a loan originator or loan officer, or what'd you do at the bank?
Yeah, I was doing a bit of a unique product. I was covering everything on the West Coast actually
Hmm.
for a department within PNC that was called PNC Healthcare. So I
Hmm.
was actually working with healthcare providers to help them manage their administration with healthcare payers, so that both their data and their dollars kind of played nicely together. So that was the
Gotcha.
product that I was a part of, and was covering accounts and doing some sales out on
Yeah.
the West Coast.
Talk to me about the leap of faith. that day when it came, ultimately, what did that look like? You had how many rental properties, and then what was the plan at that point in time? I mean, what was the next 5-year vision for the growth of your new company?
Yeah. So, I had bought a duplex the year I graduated from college, which was also the year I started with this regional bank, PNC Bank. And I had a really great run at PNC. But over the 5 years, I had been acquiring and operating real estate. So I got to the point where I had 20 units.
Hmm.
And it was then that I started to really feel what I would say is called to real estate. I felt like this real draw that I just couldn't let go. I knew that there was purpose for me in the real estate business. And so I speak about this a lot now, but I was looking for the convergence of my purpose, my passion, and my proficiencies.
Hmm.
And so I really enjoyed my job at PNC, but I didn't have that convergence of all three. And so it was really in real estate that I felt drawn to have a convergence of all three of those. And yeah, December 2012, was very nervous. I had a great job. I could have kept that great job. Many mentors of mine told me to not, leave the great job and to kind of keep working my way up the corporate ladder. But I knew I couldn't do it, so I resigned from that job, and I had 20 units. And the 5-year goal at that point was to get to about 100 units.
Hmm.
And we did that pretty quickly, actually, over the course of like the next 18-24 months. And then from there, we actually launched the first fund.
All righty, good deal. That's exciting. So, back in that time frame, real estate was cheap. It was on sale, and you could buy it for a fraction of what it's selling for today. So good timing on your part. Great time to buy. So I guess maybe bringing us up to speed today. I mean, how does your business differ today, than what it did back then, and kind of like the original framework of a Birgo in those first couple of years? I mean, is it a drastic difference aside from size of it, right? Like you guys have grown, you've scaled, but are there any other fundamental changes that occurred along those, I guess you call almost a decade period of time?
Yeah. Oh, yeah. Many, many changes. Well, in the early days, I honestly didn't know what we wanted to do. And
Hmm.
so ended up doing a little bit of everything. So our first fund, we were buying commercial. So we bought some office and some retail. And then we were doing some development at the time. So built 3 townhomes and built another 3 townhomes, and actually ended up building a 36 unit multifamily building as well. Doing some like flipping of houses. So,
A
buying some
little bit of
houses,
everything. Yeah.
renovating a little bit of everything, doing some historic renovation of properties. And not only was he doing everything as a business, but I was doing everything as an individual too. So I was, in the early days doing the property management, the leasing, and the maintenance, right? And just kind of a little bit of everything. So very, very disjointed. And so what we learned over the past decade, the main thing I would say is focus. And so just focusing on what we think we can, do best and forget the rest. And really, really narrowing down our operations and our shop on that one particular thing, which for today for us is a multifamily, and kind of the 100 to 150 unit world is really our sweet spot.
Okay. And then in what markets, geographically speaking, are you focused in?
Yeah, we buy in 4 states today: Western Pennsylvania, Western New York, Northern West Virginia, and then in Ohio as well. We're in a couple markets in Ohio, like Cleveland and Cincinnati. We do plan to expand into other territories. We've seen some deals in Indianapolis and Kentucky, Louisville, Kentucky, things like that I think are
Hmm.
good markets for us to expand into eventually. But as of right now, it's those 4 states.
Got it. Curious about New York. Obviously, very very different. Very different operating a business and real estate in New York. Western New York. I'm assuming like what Buffalo, Syracuse, that area,
Yep.
that region. Okay. Yeah, we used to own quite a bit of property up in Buffalo, and I think it was 2019 when the statewide rent control got passed. So talk to me about navigating just the local politics and some of those nuances, which are fairly significant to deal with.
Yeah, it's a different market. I mean, honestly, all of our markets are a little different and bring their own set of challenges.
Yeah.
Um, but yeah, there is, some tighter rent control, a little bit more tenant friendly. legislation there. But we manage around that and it's fine. The biggest thing we've actually been dealing with in that market right now is they're building a new stadium for the Bills, and that's actually taken a lot of the labor from the market
Interesting.
to help out with that. So the labor market has been a bit challenging there. But for the most part, I mean, just what we do is Class B, average rent $800 a month. And we haven't had major issues with anything related to the politics of that market at
Okay.
this point.
Will you still buy there actively today? And I know that you currently own there, but will you actively buy new assets there today, even with the rent control in place?
Yeah, we would.
Okay.
In fact, we're always looking to expand in our existing markets, and yeah, the Buffalo market has actually become our second largest market after Pittsburgh.
Yeah.
We're continuing to kind of buy there. We just recently bought about 200 units there.
Okay. Yeah, we loved, I mean, as far as the market itself, we absolutely loved everything about it. We ended up selling out of those assets, I think in 2021. And but yeah, no, great market, just lots of growth. It just again, we talked about Pittsburgh and what I recall. I hadn't been to I was recently in Pittsburgh 2 weeks ago, but I hadn't been there for probably 25 years. And a significant amount of progress has been made over the last couple of decades. And I think Buffalo kind of follows that same vein. We used to drive through Buffalo. I grew up in Pennsylvania and in Harrisburg. We used to go up to, Canada, Toronto and all that. And we drive through Buffalo. And I just recall, 25 or so years ago, Buffalo did not look like it does today. It was just it's a very different, all for the better, right? Like it's come a long way. It's grown up quite a bit. Just lots of positive progress has been made over these last 2 decades. So we've really enjoyed operating there and owning there, but again, just found a lot of challenges with the local politics. So we decided to, I guess, go to areas that have less of barriers to operating. So with that,
Yep.
let's talk about really, I guess, in the last 18 months, right? Rates are now coming down, so we're on the other side of this. Hopefully, this trajectory to where hopefully we're going to see additional decreases with the rates here over the next year or two. But the last 18 to 24 months have been interesting to say the least. Just a lot of volatility, lots of challenges, transactional volume down. So what does your business look like over the last 2 years? I mean, have you guys still been finding opportunities? If so, what are you doing? What is setting you apart and what are you doing differently in order to continue growing during this somewhat challenging time?
Yeah, well, you're 100% right. I mean, you mentioned earlier in the conversation, 10 years ago, we were buying real estate at a discount. And
Hmm.
really, it was kind of the whole, all boats rise in a rising tide. I mean, it's
Yeah.
just all you had to do was buy real estate and hold on to it. And we were generating great returns. Um, Now there's, a couple things. One is I think you really have to operate for profit. So you can no longer operate just for appreciation. I think you have to be operating for cash flow and for profit, which I know are, some of the things you talk about on this show. And some of the ways we do that, I mean, the interest rates are challenging. They make it harder to acquire for sure. And we're generally a net buyer. We prefer to buy and hold if possible. So
Hmm.
really just what we're seeing is it's harder to have deals pencil out from an underwriting standpoint. Now that said, we actually have found deals. We bought 40 million this year so far. We had a good year last year as well, 40, 50 million,
Hmm.
which is pretty typical for us. And we're just realizing that we're needing to buy different deals. And so we launched an opportunistic fund at the beginning of last year because we really expected to see a little bit of pain in the market. We expected to see some more opportunistic value add deals. And that has proven to be true. I will say probably not as much as we expected. I think
Hmm.
that, lenders have not allowed there to be quite as much distress in the market. They've been working with, I think, their borrowers to, to hold on to a lot of their assets. And so we've been buying deals that just they're a little bit messier, have a little bit more hair on them than typical. We're having to put a value add strategy and plan in place. And that's how we've been able to generate return and buy deals over the past couple of years.
Yeah. What in the last 2 years, what have been some of the distress points that you found from sellers? Again, we've had a good 2 years as well, just buying. At least for us, it's probably more classified as distress situations than it is
Mhm.
distressed properties.
Right.
Surely there's always an opportunity with the property to increase revenue, increase value, but most of what we have seen, at least in our world, is distressed situations, partnerships or debt maturities. Debt maturities have been a big one.
Yep.
How about you guys? What are you seeing?
Yeah, that's exactly what I mean. We've seen three, and that's exactly what I was going to say. Is it's more related to the situation typically.
Yeah.
The dynamics are one, either they borrowed variable rate debt, and their mortgage has gone way up, and so the property is now negative from a cash flow standpoint, so that forces them to sell.
Hmm.
Two, debt maturities, like you said, where they took out a 5 or 7 year loan and it's now rolling off, and they borrowed at 4% and current rates are 7. So they would have to bring money to the table to refinance, and they don't have that money. Or third, we are seeing some P&L distress. Inflation has just caused, expenses to inflate, and a lot of times, particularly generational owners, haven't kept up with the rent increases that inflation would suggest. And so we're seeing a little bit of that as well, where there's just an opportunity to boost the rents and manage expenses a little bit better.
Hmm. Yeah. No, very, very interesting. So long-term hold, that's a strategy very similar to us. You really, we like to buy assets that, we feel, we'll enjoy owning not just today, but, 10, 15, 20 years down the road, make sure that we're in the right submarkets, make sure we're in the right school districts, and just buy, what we like to classify as like more irreplaceable real estate, just irreplaceable locations, irreplaceable real estate. So what does the strategy long term look like for you guys? I know it sounds like you've got multiple funds. How do you, in perpetuity, how do you hold on to these assets? What does the future plan look like for recaps? Is there a roll up at the end of the horizon? Just bigger picture stuff. Just interesting to hear kind of what that looks like 10, 15, 20 years down the road.
Yeah, absolutely. So we take a similar position when we acquire real estate. We generally want to acquire stuff that we want to hold long term. But the difference maybe with us is our funds are, at least our last two funds have been 5 year funds. Our
Hmm.
first two funds were 10 year funds. And so we're actually only putting a business plan together for that asset for 5 years.
Okay.
One of the things we've realized actually from our first two funds is that 10 years was just a little bit of a long time horizon for a business plan, because in years 5 to 10, there's so much uncertainty. Like, oh, yeah, that roof was fine, but now we're realizing it might need to be replaced. Or
Hmm.
that HVAC equipment was fine, but now we need to replace it. So we're just realizing that after 5 years, those assets are ready for a fresh infusion of capital.
Hmm.
And so what we're doing is we're acquiring assets with a 5 year hold period. At the end of the 5 years, we are looking at all those assets and saying, okay, what do we want to continue to hold? And what do we want to sell? And we've just found that it's ending up being about 50-50. We're selling about 50% of our assets. Just they've kind of run their course
Yep.
and they're ready for a new owner. And then about 50% we're like, hey, this is exactly what we had hoped to buy. It's a long-term Birgo asset. Let's hold on to it. And so then we're giving our investors the option to either cash out or to roll into the next fund on a tax deferred basis. And
Hmm.
so we're also finding our investors are about 50-50, where half of them are ready to cash out and the other half
Yep.
don't want to pay capital gains tax and want to stay in. So far it's just kind of working out that we're selling assets when we need to, we're holding the ones we want to, and our investors are staying in where possible.
Yeah, fantastic. I love the options that you give as well. And I'm assuming you probably we're going through this right now with a number of our older legacy funds, kind of putting out surveys, finding out really what the investors are seeking. Well, the feedback that we're getting is about 50-50, just
Yep.
as you had stated. A number that just want to roll into the next thing, or some that truly want cashed out. So very interesting. So let's talk about Virgo. I have spent some time on the website. You got quite a bit of number of cool things that you guys do there. I know that it's really built around core values and kind of a collective mission. So talk to me a little bit about that, but more specifically, I guess, what really sets Virgo apart from the competitors. There's obviously lots of other groups that run a similar business model, but you guys seem to rise to the top. Why is that?
Yeah, it's a great question. And thank you. I appreciate the um sort of the tee up and the kind words there. So I do think that we are different. And that is just a function of sort of my DNA when I had jumped into real estate. And I think that has followed the organization over the past 10 years. And the thing I would just point to is our mission. So for me, real estate was always just a means to an end. Um, and that's not to discredit folks who really, really love real estate. And there are many people out there that really love real estate as an asset class. And I like it, but for me, it was more about the people.
Hmm.
Like when I first got into real estate, I just thought it was the coolest thing that I have an opportunity to put a roof over someone's head
Hmm.
and like be the landlord of a place where somebody's raising their kids and they're living there as a family. And I fell in love with the people side of the business. And so I even really loved the leasing process because it's like, hey, I'm helping somebody, envision this being their next new home. And that has followed us in our DNA, I would say, for the past 10 years. So our mission of improving lives through real estate, through real estate is the key there because real estate, again, is just for us a means to an end. So we think a lot about how we impact our residents. We think a lot about how we impact our investors. And we think a lot about how we impact our employees. We actually developed an entire employee development program that is about them finding their purpose and
Hmm.
understanding their unique DNA and helping them to live the life that is most aligned for them.
That's awesome. No, I love every bit of that. In fact, there's a book called The Dream Manager. I don't know if you've ever read it or not, but
Mhm.
probably similar in alignment with, but just really understanding your employees, but also that everyone's got hopes and dreams and wishes, and putting together the framework and the structure internally to help them not just make money, right, and not just have a job, but ultimately fulfill their own individual dreams, whatever they might be. So anyway, just make a note of that. It's a simple read and it's a phenomenal book,
Yeah.
but probably very much in alignment with what you guys have put together there. So, talk to me about finding the right talent. Finding the right talent of that aligns with your team's core values. Have you found that to be difficult?
Very difficult.
Yeah,
Yeah.
yeah.
So it's the thing that we work on the most is hiring people around our core values.
Hmm.
So, our core values spell out the acronym THRIVE, and they're a little bit unique and quirky. Like a lot of companies have teamwork as a core value, which is one of ours as well. But we also have made up a word in there, rhinocerality. So we're big on the rhino over here in our company, and we like to hire people that are driven, that
Hmm.
charge like a rhino, but also that have thick skin like a rhino, that aren't
Hmm.
gonna, when the torpedoes start coming, aren't gonna, immediately run away. It's a challenging business, and we want to make sure that people, come with thick skin. So we embody this concept of a rhino, but that has to be offset with humility.
Hmm.
Another one of our core values, and that's just another thing that I found so rare in our industry is, and again, no disrespect to anybody in the real estate industry, but I think there is a lot of beating of the chest and pride in the industry, and we want to hire people that are um, view their work as service.
Yeah.
And so that's where the humility comes into play. So the combination of humility and rhinocerality, I think, are rare. And so we do a lot of work to hire, manage, review, reward, recognize, and when necessary, fire around our core values.
Hmm. Yeah, no, I love it. I love it. So, talking about torpedoes are flying, right? Make sure that you got the right team there when the torpedoes start flying. Let's talk about, again, this it's a fun business, but it's surely not always easy. Along with it comes challenges. Even after you've done hundreds of transactions, you think you've seen it all, but then something comes and smacks you right in the face, right? So let's talk about. I love, it's always a lot of times we talk about all the great deals, about the great opportunities, deals that we've done really well with, if just knocked out of the park. But the challenging ones are really what really turns into who we are, right? And create that rhinocerality. What rhinocerality? That's hard to say.
Yeah,
Yeah,
you,
but I
you
just
nailed
butchered
it.
that. But anyway, um, so talk to me about a challenge, one that comes to mind, challenging deal that just beat you up left and right. You lost sleep over it. It created undue stress within yourself, within the organization. Whether it's a deal you bought or you didn't buy, you walked away from it. But just, I'm sure there's been many of them. But one that comes to mind, maybe tell us some more about it. What were the challenges? If you did overcome them, how'd you do it? And then, what was the final outcome?
Yeah. Oh, it's a great question. I mean, honestly, to your point, the torpedoes are coming and challenges are inevitable. And honestly, I could probably come up with 100 examples. I'll pick one in particular just because it's one that I was super close to, and just it was a passion project of mine. So
Mhm.
I mentioned to you, we actually ended up designing and building 36 units, and it's actually immediately adjacent to our office, which also happens to be 3 blocks away from my house. So I'm passionate about this project. It was the last standing building from when this area was something different from the city of Pittsburgh. It used to be called
Mhm.
Allegheny City. And so just this really cool building, cool project. So in 2015, we were selected to develop this, and then became a series of challenges that ultimately culminated in us not even being able to break ground until 4 years later.
Wow.
Which of course took us to COVID. So we
Oh
build
my
this building
gosh.
and then COVID hits. And then we had to figure that out. And so from working with the design folks, the historic review commission for the city, for the neighborhood group, I mean, just challenge after challenge after challenge. And we kept being resilient and pushing through. And then we ended up having a good outcome with it, but I always tell people, if I added up the amount of time I put into this job, I guarantee you I made less than minimum wage.
Yeah.
Like I could have been doing anything else.
Yeah.
Like you could put me in the kitchen and washing dishes and I probably would have made more money. So
Yeah. Well, I mean, were most of the challenges on the delay side due to the Historical Preservation Society and or whoever oversaw that within the city? Is that what made it go so slow?
yeah, I mean, if anybody has ever uh done any construction or done any work on their house, it's always takes twice as long and costs twice as much. So definitely just the construction and the design were just very complicated. The fact that it was an old historic structure was very complicated too, that we were trying to preserve. It would have been cheaper to just build something
Yeah.
brand new, but that's not what we wanted to do.
What was it? An office originally, or what was?
Actually, it's a funny story. It was a horse stable for
Wow.
when they used to have horses and buggies go repair the highways and sewers. So they actually used to hoist the horses up onto the second floor of this building and store the carriages on the first floor. And so just a really neat looking historic building that is today is actually called the Stables Lofts.
Very cool. You guys still own it today?
Yeah, we do.
Very neat. Very neat. I love it. Andrew, I appreciate your time here today, man. So for those that want to learn more about you and Birgo Capital, where's the best place to track you down?
Yeah, you can check out our website, birgo.com. That's birgo.com. You can check me out on LinkedIn. I'm pretty active there. And
Mhm.
you can just look for Andrew Reichert and feel free to follow me or connect. And yeah, I also have a book coming out here later this month. So it's a book called Priorities on Purpose. It's actually pre-sale on Amazon right now. And you can
Nice.
check that out at rosjourney.com as well.
Awesome, buddy. I congrats on the book as well. I know they're a labor of love as well. You talk back about the development project and the amount of you envisioned it was maybe you had a different experience, but when I wrote my book, I thought I'd be able to knock it out and I gave myself a year and it turned into like a 3.5 year project and went through different iterations over time and ultimately finally got it to the finish line. So kudos to you for sounds like you got you to the finish line. Hopefully not as many bumps or bruises as I had getting mine there, but either way.
It's
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 completed.
always a challenge. Yeah.
Yeah,
Anything
yeah.
in life, you gotta
Yep.
be a rhino though, right?
That's right. That's right. I love it, buddy. Well, I appreciate you coming on the show. And guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.